Maybe I've been burned by investing in the altcoins, whether it's good technology, bad technology, meme coins, whatever the case may be. I've been burned, and I feel like Bitcoin doesn't necessarily give me that itch. What are you currently doing on your end that you could share with us that perhaps I could do, others can do, to mimic some of the similar gains, but not necessarily get burned by these altcoins? A lot of people on social media are starting to come around and realize that this cycle looks a lot different, at least up to this point. We'll see what the future brings, but if you look online, what a lot of the influencers are saying is crypto is much harder now. The cycle is very different. And truth of the matter is that Patrick, also known as Crypto Rookies, who comes onto my channel, has been saying this for a very long time. In fact, he put out an article November 13th, 2023, talking about the rotation and how you have these institutions that are going to be buying these ETFs. But in terms of the liquidity flowing beyond these ETFs, it's not really going to happen. And so what you're ending up with is that Bitcoin is the king. So what do we do with this information? Well, as always, I bring on Patrick to talk about some of the things that we can do to capitalize on this situation that we're in. Now, whether or not we're going to be in this situation moving forward, that's a different story. But reality is, what do we do right now? So with all that said, Patrick, welcome back to the show.
I would still mention that at this point in time, based on just a day ago, Jerome Powell basically said that there will not be quantitative easing for quite a long time, at least until the interest rate goes down to near zero, basically. We are not going to see the same thing that happened in COVID with the massive amount of liquidity that was given to retail. So a lot of that last bull market was driven by the COVID stimulus. And then if you go back even further down, like 8 years ago, that cycle, a lot of the growth was simply because the crypto market was a lot smaller. So it didn't require as much liquidity from a retail perspective to move the market in large amount. I think right now, this cycle is special because in order to move Bitcoin, you need that much more money. And right now, retail has, I would say, no impact whatsoever. It's really the institutional player and the governments and the very large corporation that are moving this, like MicroStrategy. And I think that, especially, for example, MicroStrategy openly said that they will never touch anything else beside Bitcoin. So it's a pure Bitcoin play. And a lot of other entities are doing the exact same thing. And I think they are the ones who are pouring like billions and billions into this. So if they don't rotate out of Bitcoin to put into elsewhere, that means that in terms of reward versus risk, if you get, I don't know, a 2x return over the next 12 months on Bitcoin with very low risk, why would you go down the risk curve and go into the large cap or the Ethereum to try to get maybe FX, but much, much higher risk? So that's basically what's happening and why right now, maybe it's just better to stick to Bitcoin and to maybe Solana. And for me, that's the main one that I'm playing with. That's basically what's happening. So with that said, I don't think right now a retail this cycle has any power at all, except if you're talking about a very low market cap token that is not supported by market makers. Because that's the other big players that move the market is market makers. You have big entities and you have market makers. And the market makers right now, there's simply too many tokens on the market. So they just play the musical chair, moving from narrative to liquidate as many traders as possible. That's how they make money.
So being that we have Ethereum ETFs, why isn't Ethereum moving? And then you're also mentioning that retail doesn't have any power, and yet Solana was doing well. I mean, who's buying Solana then?
It's the market makers, and right now it's just Bitcoin. There's no other alternative in terms of a store of value. It's very anticipated that Solana will get the ETF also. And at that point, I don't know if there will be that many players still playing on Ethereum or the layer 2 of Ethereum, because Solana is just a better technology stack. Until there's another yet better technology stack, maybe it's Sui or something else. But right now, Solana there's nothing that compare in terms of speed and quality and maturity of the technology. That's why.
So do you anticipate no altcoin season at all? Because right now we don't have quantitative easing.
I think even when there will be quantitative easing, if it comes, the market makers, there's just simply too many tokens on the market. So I think they will keep playing the musical chair. I think there will be at some point, some market that you can get very rich, but in terms of risk or reward, I'm not sure it makes sense. And I think at this point, it's becoming more clear every day that we will probably bypass the 4-year cycle.
It's also possible that this cycle is looking more like 2017 than it is 2021, where we have this double top.
That part is possible. The only thing is that back then, the crypto market was so small that retail could have an influence. I think right now, unless you're talking about tokens that are not supported by market makers and have a very small liquidity, then a retail can have an influence like meme coins that are just launching. Other than that, I think retail is completely powerless. So whenever I hear really solid influencers talk about the bear and the retail and the bull are taking control over the price chart, it's all nonsense. It's the market makers that are freaking the market into going one way or another just to flush them out just a few weeks later. And the very small amount of news, the market swings such a large amount on those altcoins that everybody gets flushed out that has any leverage. And Bitcoin is barely moving. The thing is that the market makers, I think, have lost power to influence Bitcoin that much because of the institutional buyer. Every time they try to push the price down, I think this MicroStrategy just load up and buy more. So I think they don't have that much influence, and just the sheer size of it is just hard to move. So I think that's why the market makers just concentrate on just going from small token, like from narrative to narrative. So the thing, I don't know him, so I stick out of that one.
Okay, so let's play along with your strategy where, okay, we're going to stick to Bitcoin for now. Maybe I've been burned by investing in the altcoins, whether it's good technology, bad technology, meme coins, whatever the case may be. I've been burned, and I feel like Bitcoin doesn't necessarily give me that itch, right? I feel like I can maximize my gains a little bit. What are you currently doing on your end that you could share with us that perhaps I could do, others can do, to mimic some of the similar gains, but not necessarily get burned by these altcoins?
Yes. So I'll make a little bit of a diagram first. So for me, I would say I have like two main buckets. So let's say Bitcoin and Solana. And this I play with grid bots. This is just to generate yield, because it's kind of like if you buy a house, but you just bank on the capital appreciation of that house, you miss out on the renting income. So a grid bot enables you to put your asset to work to generate yield. And I'll show the result of that. But then I have another bucket where I would put some extra kind of excess cash as I build this, because there's a little bit more risk here. But then I put just a pure Bitcoin in this case. And this is what I call like my pension plan. And this, I use Aave for that. So that it's a peer-to-peer lending protocol. What I do here is that I don't generate yield, but my goal is that I just add a Bitcoin into this pool, and then I can take loan against my Bitcoin without having to sell the Bitcoin. So the plan here is that I never sell the Bitcoin. It's more like a MicroStrategy type of mechanism. So here's one Solana bot that I have active. I started it when it was $215. Right now I'm below my range. This is like a tight range. It was between 199 and 245. I'm below the range. I will basically shut down that bot and reactivate it like below the range, because now I'm not accumulating the yield. But I'm on a 1x leverage. So that means that I don't really have leverage on this one. So I'm really not at risk. As you can see, the liquidation price would be on a 75. And right now we're at 190. So the thing, it's a very safe thing. Over the last 11 days, I accumulated 1.74% of matched profit. This is what matters. But my total profit, because I launched this bot at 214 and now it's at 190. I have a negative total profit. That's because the bot bought back Solana as the price was going down, but my overall position is in the negative territory. But I accumulated real match profit. This I cannot lose. It's just accumulated yield. You can be in negative for a while, but if it keeps fluctuating, usually it will converge to the match profit, because those negative things don't really last forever because you keep going back and up. But this, since it stays, it converges to this over time. But in this case, I'll probably just shut down because I'm significantly below my range and I want to keep accumulating. But even with that, the 174, so 1.74 divided by, let's say 12 days, this is 0.14% per day. 5% per day. And let's say that I compound like once a month by reactivating the bot or something. Just on a year basis, this is still 67%. And the interesting here, this bot, because it's a coin M, that means that the return here is only the return on the native token. So it doesn't consider the price appreciation of my Solana. And it also doesn't consider the price depreciation, but it's only the relative to the Solana itself. So that means that if I make 68% per year, that's only the accumulation of Solana itself. But if Solana has, let's say, did a 5x over the next year, that means I get 68% times the return of the growth of the price of Solana itself on top of that. Because this is just the extra amount of Solana that I get over time.
So CoinM is for accumulating, if that's your goal.
Exactly. You would want to transition out of that late in the bull market cycle. But in my case on Bitcoin, I will probably keep it active maybe for the next 8 years at this point, because I'm really not convinced that we're going to get a bear market this year on Bitcoin, at least. Maybe on Solana, but we'll see how the market evolves. But the thing right now, I think we're still far from a market cycle peak. We may have a local peak, but I think it will be short-lived and it will be up and down. But I think the long-term trend of this cycle is we're not close to having maxed it out. So that's why I would prefer to keep it on the CoinM, because the profit keep being accumulated in Solana or Bitcoin, as opposed to USD. This is a 1x leverage on Solana, so there's basically no leverage. In the case of Bitcoin, in this case, I took a 2x leverage, and this is my range. So it's a relatively tight range, like 95K to 125. I could have made it more tight, probably 110. So I would basically, because this is only 76 trade in the last 24 hours. Let's say I could max out this a lot better. You don't want a really tight range if you are not on a coin M, because otherwise you transition out of Bitcoin too fast when the price moves. But in this case, because you're converting back into Bitcoin directly, then it's good. It's fine to have a tight range to max out the match profit. So in this case, I have 2.97%, and this is over 24 days. So this is 0.12 also. 0.12. Then also in this case, it's 53% of extra Bitcoin that you're accumulating over time. So no matter what, even if I could run this bot better with a tighter range, it's still very much acceptable in terms of return, as you can see. So assuming that on average, Bitcoin do 40% per year over the next few years, you're getting an extra 53% on top. So at this point, do you want to get the extra risk to move down the risk curve? Because this is very safe. As you can see, I'm a bit in the negative here also, but I started this at $107,000. I was very much I initiated this bot at the peak, basically. and we're significantly down. We're at 95K right now. So we're very close to my bottom range also. So I think this is the worst case of that bot, but it's still just minus 7% on the 2x leverage, which is not that bad. Just because I keep accumulating this. So at this one, I don't really need to shut it down for now. So this one, I started with low leverage when Solana price was much higher. And then I kept increasing the leverage and reinitiating a new grid bot with a lower range as I was going down, just to recover the losses, expecting that it would bounce back. But at this point, I'm starting to anticipate that the market is not going to recover that fast right now because of Jerome Powell and the Feds that are just not decreasing interest rate and all that, those kind of thing. And Trump is still negotiating tariffs with other countries. So I don't think right now the US currency value will get decreased or the interest rate to decrease significantly or getting into a quantitative easing. So I maybe Solana will get the ETF approved soon and that could give it a pretty big bounce. But otherwise, I think I'm ready at this point to reset my bot again, but I'm on a 6x leverage at this point. And I'm saying I started this bot at 218. Now we're down to 190. I think I'm minus 33%. So, you suffer quite a lot more on a 6x leverage. But this one, you see, I accumulated 11.7% in 11 days. So that's like more than 1% per day. So if you consider like the compounding that we're talking earlier, 1% per day, this is insane return on top of the potential price appreciation of Solana, 1,300%. It's just that right now I think I'm suffering quite a bit because we're quite below my range. But I think at this point I'm ready to shut this one down and reactivate it. Because you get extra volatility, you have to make sure that you go much lower leverage on your bots. And like with that kind of amount of return, like 11.7, I don't feel that I need that much to go down the risk curve. That's basically how I see it. And I think Solana, I think as an ecosystem, will do well regardless because it's not just meme coin. There's a lot of technology with DeepN and with AI and all kinds of stuff that I think with the ETF coming up, I think it's a pretty safe bet. Because in minus 34% still hurt when the market goes down like this. So that's why I think it's important to consider going to add some extra return when the market is going well, to add it into your Aave position. So I can describe here, like, for example, right now I have a $33,000 of borrowed money. So I can use the aavecalculator.com to find what is my liquidation price. So I selected the Polygon V3. I put 33. It's 33,165. And then I have a position of 0. So it's saying my liquidation price, Bitcoin would have to go down to 56,799. So I think it's quite safe right now. You would need a very bad black swan event that would trigger the market makers to be able to push the price down to this level. Probably a third world war or Trump getting shot and killed would be required to move the price that much. Regardless, as I get more money from my bots, I can buy more Bitcoin and then add it as more supply here, which will reduce further my liquidation price. My plan is to do that as we get probably above $150,000 on Bitcoin. At that point, I will no longer take as much loan anymore. I will just keep adding more supply. But right now, what I do, why I took so much loan is because I added Bitcoin as collateral. I took a USDT loan. I bought more Bitcoin. I added it back as collateral, and I kept doing the rotation to basically increase my Bitcoin collateral. So most of that loan here went into just increasing the amount of Bitcoin that I have. And then every time I add more Bitcoin, then it brings back my liquidation price below by increasing my L factor. So yeah, the thing that you want to not always rely on the exact same strategy, because let's say right now, most of my capital is on Binance. If something happened to Binance, I'm screwed. So that's why having some money on Aave also diversify your risk to a certain extent.
This video that we put out, it says 2 weeks ago, no alt season, no problem. We actually go into more details. So if you found this video helpful, definitely check out this video where we dive deeper into some of these strategies.
And by the way, you can also contact me to join my private free Telegram group where you can ask questions and we can go in more detail and I can basically help you out to get set up on all that stuff.
Perfect. Sounds great. I'll include that link in the description. Thanks so much, Patrick.
Pleasure.
You take you are risk on, but you also do it very calculated. And so that's certainly something that I appreciate and always enjoy learning from you. So if you found this video helpful, please subscribe to the channel, like the video, give Crypto Rookies a follow. He's on X, and catch you guys on the next one.